Welcome, everybody, to the latest episode of the Orange Wheel podcast. I'm Ted Paulus, co-founder and CEO of Orange Wheel, and I'm joined today by Sander Andersen. He's the executive chairman and co-founder of H100, which is the largest Bitcoin treasury company listed in Sweden. And he's also CEO and founder of FinPeers. Been really excited to have you on, Sander. We've had the chance to meet in person at a couple different events last year. How are we doing today?
Doing great. Thank you. Thank you for having me, Ted. Looking forward to the conversation.
Amazing. So let's set the stage. Just be great to hear a little bit about your decision to kind of launch or to make H100 a Bitcoin treasury company, and maybe tell a little bit about, I think most people who are watching the show might already be a little bit familiar with you, but a very brief background of yourself and the decision to launch a Bitcoin treasury, and kind of the current status of where the company's at today.
Yeah, so I started as an entrepreneur when I was 17. So I have over the last 12 years done multiple digital ventures, and more or less all of them has been around creating a community towards a common goal. So when I moved to Switzerland in 2022, I was in a pivotal moment in my professional career. We started a company called FinPeers, which today is a family office network investing exclusively into Bitcoin investment strategies. That today has around a total wealth of $60 billion. We do regularly deals with them. And through that process, we followed MetaPlanet and more importantly, of course, strategy before that. But MetaPlanet was really the aha moment for us to say, okay, these Bitcoin treasury strategies is going to develop worldwide. And as a person from Norway, seeing what centralized governments and bureaucracy can do for their people, I was convinced that the Nordics needs Bitcoin and it needs Bitcoin native companies. So we decided to start H100 and we listed in April last year. And back then it was no publicly listed company in the Nordics. It was only Aker in Norway, which had a subsidiary with 750 Bitcoin. So we decided to list the health company and start a financing strategy buying Bitcoin. So the first Bitcoin we bought was from the pre-IPO round, and we bought 4.39 Bitcoin. And that really accelerated everything. We back then was able to use what was called and still called the equity flywheel to accumulate around 1,046 Bitcoin. We raised 1.2 billion Swedish kroner, close to roughly $120 million, and positioned ourselves as the biggest Bitcoin treasury company in the Nordics, by Adam Back, which is a person I have known for quite a few years. And it made sense to bring him on board and build this company. Today, we are listed in Sweden and we have around 4,500 shareholders in 20 different countries, with tickers in both Germany and the US. What we really try to do is to create institutional Bitcoin products in a regulated market. And that's where we are today. I guess we will come back to the Q4 was a tough quarter, but I think that was a necessary medicine for this industry to understand what's next. And I think we have a very clear plan on how to do that. But
awesome. No, thanks for that background, and very impressive growth in a short period of time, even despite the kind of lower sentiment we experienced in the last quarter of 2025. Maybe just a little bit about the Nordic region first. I think it certainly has a reputation for being usually quite digitally advanced, and also, fiscally disciplined governments, relatively speaking. What is it about the region that you kind of see special compared to other regions when it comes to applying a Bitcoin treasury play? And why has the adoption maybe appeared to be, from my vantage point at least, a little bit slower than other?
Yeah. So if you look at the Bitcoin ownership in the Nordics is relatively high, or I would say it's in the middle. I think in the Nordics, we trust humans a lot. We trust the government a lot because we have had like 50 years of a bull market where basically no one has seen any real issues. But I think now with the geopolitical conflict and the devalue value of the dollar or debasement of the US dollar, I think more people start to understand that they need to find a solution on how they manage this. 2025 was a year where we saw rare metals like gold and silver rallied quite a lot. I think that shocks people when I tell them that foreign central banks are buying more gold than treasury bills from the US at the moment. And we also see like strategic export restrictions on rare metals like silver. So that puts us in a situation with two things like high geopolitical tension and two, less trust in the US dollar. And that impacts Europe and more importantly, the Nordics as well. What's good with the Nordics is that we are quite familiar with commodities. Like Norway was quite good at taking advantage of oil. So I think we are quite international in the Nordics. We understand that the commodity can scale globally, and we understand the importance of taking advantage of a commodity on even a national level, like we did with gold. That's not where we are with Bitcoin, but similar to oil for me is like a battery of energy. It's like if you don't do anything with it, it's stored energy. And the same with Bitcoin. It's stored monetary energy. And I think more and more people realize that it's important to own part of it, both on an individual level, operational level, and government level. So if you look at the Sovereign Wealth Fund of Norway, they still have allocation to both strategy and Meta Planet. Of course, it's an index type of strategy, but they don't exclude this kind of strategies. And we saw that with the Morgan Stanley index as well. After a lot of FUD, they decided to include digital asset treasury into their indexes. And JP Morgan, Morgan Stanley, all of them are now preparing Bitcoin products. So I think that relates back to the Nordics, that we are not quite the early adapter, but when we see consensus in the global market and the global tension, geopolitical tension, we starts to take it seriously. And the conversation we are having on an institutional level, both in the Nordics, we also decided now to enter Switzerland, is that institutions want more information, they want more education, because they will eventually start allocating a part of their portfolio, because that's the global consensus now, that you should have a small part of your portfolio in Bitcoin. So that's where the Nordics are. I agree with you that we are a little bit behind, but we are digital. We can adapt fast, and we have a tendency to, when we first move on something, we move quite quickly. And I think it's the right decision to try to orange pill the Nordics and try to get people to understand that we might not be as safe as we thought it would be a few years ago.
Yeah, no, thanks. Great. I think that all resonates with me as well. I think this Bitcoin thesis seems to be playing out much more rapidly now with the kind of moves from the US, right? And the kind of trust in the US from like a military protection standpoint, but also from like, let's say, trust in the US dollar and its own fiscal discipline and so forth is certainly being tested right now. And I think it's rational that all governments, especially those in Europe, are looking at viable alternatives. And certainly we've seen that in gold. And I believe, we're going to see it in Bitcoin. And it's great to see you bringing that message to institutional investors. So with that, I mean, the makeup of your investor base, I guess you do try to target institutions. You mentioned fin peers and the family offices in that network. What is the sentiment today with it? I think you kind of touched on it, but of course we're seeing some malaise towards Bitcoin treasury companies in terms of price performance in Q4. And yet we also see this kind of like, as you mentioned, the macro thesis is sort of playing out in real time. So what's the current state of play when you speak to investors today? Like how are they looking at Bitcoin treasury companies and allocation of capital?
Yeah, so we actually did an internal study to look into how does commodity companies correlates with the commodity itself. And that's a very high correlation. So What happened in 2025 is that most people had huge expectations for Bitcoin. I think the most conservative ones was 150,000 and the bull was like 500,000. So it was baked in a lot of expectations in the price movements and the ability for Bitcoin treasury companies to absorb that cheap fiat capital that came into this industry. When people started to realize that it might not happen, this bull run, the equity capital started to shrink. And what most people ignored was what Michael Saylor was doing early 2025, and he started Bitcoin credit instruments. These Bitcoin credit instruments is where I think most of the focus in 2026 will be. I think what Bitcoin treasury companies has proven is that when you would see a lot of spike movements in Bitcoin, it will be a lot of capital available to spin that equity flywheel. And that's how you build like huge balance sheets of Bitcoin. The more, when things gets tougher, the model turns 180 and thinks about how does your Bitcoin, how can that Bitcoin work as collateral for you strategically using that in your business model. Saylor has decided to do this private credit model, or in many ways like a fiat Bitcoin trade, where he take in Bitcoin on his balance sheet and he pays his investor around 10%, 11% interest rate per year forever, which is a way for him to utilize his 650,000 Bitcoin. And what I like with that trend is that you don't need to be a Bitcoiner anymore to believe in the model. The institutions can now say, okay, what's the probability that I keep my money and get my money back? So then they start to look at, okay, why is Michael Saylor doing this? So they start to understand like, okay, what's the trade here? So therefore they have to look into Bitcoin. Why is it so interesting in paying me way above market standard interest rates? He already have the cash sitting still, and he have all the Bitcoin. So then they start to understand Bitcoin as collateral, and Bitcoin as collateral will then open up for the institutions to understand the commodity itself. So for me, I think 2026 is going to be a lot of focus around these Bitcoin credit instruments. And you have multiple ways of attacking that. Like Saylor is doing it on his own balance sheet, but I would not be surprised that we will see companies that create structures around it and helps fiat capital onboard to Bitcoin credit and Bitcoin equity.
Really, really great insights there. Maybe you can elaborate a bit more on that idea of credit instruments with Bitcoin as collateral, where it's not necessarily on your own balance sheet, as you said, Saylor's doing, and then maybe to the extent to which you can communicate this. There are plans for H100 to kind of enter these types of products.
Yeah, again, as an entrepreneur, I'm a big fan of this community-driven business model. I think we will see a Star Alliance program for Bitcoin treasury companies where you could pool resources together and issue products on that collateral base. And this is how you can accomplish scale as a smaller company rather than competing directly with Saylor. So the big play in Europe could be to try to consolidate all the equity. But if you consolidate the equity on top, first of all, it's very complicated. It's cross-border M&A, it takes forever. But what you can potentially see is that these companies pool capital together on a balance sheet level, and therefore they collaboratively use their Bitcoin as collateral to issue new products with the economic incentives in proportion to what you contributed to the pool. And that is a product that you can potentially scale to other companies that holds Bitcoin, not as a Bitcoin treasury company, but as a strategic reserve, or family offices that holds 100 Bitcoin on their balance sheet that want to get this amplified Bitcoin exposure. And this is a very European way of doing things. Like we have these umbrella structures which have a tendency to be very successful in Europe. So that's one idea which I see could play out. I also think that many of these Bitcoin treasury companies will have access to a lot of fiat capital. So basically creating structures for fiat investors to invest into these other credit instruments. And this is business models that open up for revenue generation for Bitcoin treasury companies, because Bitcoin treasury companies, they talk to investors, they create institutional products, and they execute them. So for us, it's all about creating Bitcoin per share, increasement over time. But that doesn't mean that we will not look into how we can utilize the network and infrastructure we already have with other products and services related to Bitcoin.
Great. No, really interesting to hear those kind of that vision of something that's more of a collective platform for issuing instruments to be able to kind of get that scale. Really interesting concept. Haven't heard of that before today. So really interesting. One quick follow-up to that. I mean, and I know this is just a concept right now, but would you envision that more as being kind of one existing Bitcoin treasury company acting as the centralized kind of node and issuing the credit instruments from its being the issuer, or there being kind of a third party, a new entity that becomes the kind of platform issuer? Have you thought about that?
So the legal structure is nothing we can at least communicate at this point. But the general concept is that you pool Bitcoin together. So you have to have a vehicle that takes all that Bitcoin into the balance sheet, and that will be the issuer of the product, because that's where the collateral is sitting. So you will have to have a pretty good governance model that protects all these companies, that they will not lose their Bitcoin. Because my biggest challenge with all this Bitcoin yield and all these kind of things is that you're putting your Bitcoin you put risk on your Bitcoin, which potentially is a 30 plus IRR assets for the next 15 years. Like, the biggest risk you're taking is not generating yield. It's actually losing your coins.
Yeah.
So you have to have this governance structure around a pool resources, and probably that's solvable. I mean, you can check it on chain, you can legally enforce it by having no rights to do anything else than what's have been agreed on in the investment committee for a vehicle like that. And then each participant will contribute with their percentage of Bitcoin. And if you issue any instruments, you will get your percentage of that new Bitcoin coming into that vehicle.
Okay, cool. No, really interesting concept. And maybe that, I don't know if this is safe or not, but you mentioned earlier, of course, the LOI with Future Holdings based in Switzerland, which is where you reside in Lugano. It'd be great to hear a bit more about that announcement. What's the kind of overarching strategic rationale at play behind such a integration?
So the whole thesis for us is that consolidation needs to happen in Europe. And when we heard that Future was not able to list due to what we think it's not a legit reason, other than it's for us as a potential owner of this company, we can fix the problem. It's not a problem it's not a big problem to be solved. So we saw that opportunity to enter Switzerland, which has the lowest interest rates in the world. It's actually in many ways negative, or at least calculated for inflation is negative. So the market is yield starved. It's a market where we are. And I hope the transaction also strengthen our team to create more institutions and banking experience. It's still subject to the SPA, and we will see how the final agreement look like. But the whole rationale behind the deal was we saw an opportunity to enter into a one-stop shop solution for the Swiss market. Every preparation was done. They raised around $35 million from very, very good investors. Some of them we very well known. So it was it's a platform acquisition for us to utilize and accelerate that progress they have already started. And it's a market we know quite well. So that was the reason why we looked into it. And I know Richard Byworth for a long period of time, at least in the Bitcoin world, it's a long period of time. And yeah, we really like the team. We really like what they have done, and we really like the market. And we think that we have the right infrastructure to execute on what they wanted to do.
Really cool. What would be the total Bitcoin holdings of such a combined entity if the deal is to be successful?
So that is still unclear, because they had to deliver back all their Bitcoin because the listing requirement was not met. So we have to re-engage the investors, but we believe that we can accomplish more together than what they did alone. So we think this transaction could open up for a significant amount of Bitcoin coming in after the transaction is done.
Really cool. So there's kind of pledged capital that would then be reallocated to Bitcoin in the case of a successful merger at this stage?
Yeah, so the capital again, it's very important to say that the capital is delivered back. So what we acquire is all the listing documents, all the banking relations, everything they have done to prepare. But we think that we can re-engage a lot of those investors together as a team and go for a potentially Swiss listing, dual listing, and utilize so H100 can operate in multiple markets.
Yeah, very cool, very cool. And would you say so this was? Sounds like this deal was a bit more opportunistic. It happened to arise. There was the networks in place. They had a problem you believe that you could resolve. But do you also have this kind of longer term strategic perspective of doing more consolidation, driving more consolidation within the European region as well?
Yeah, I mean, what I like with the Bitcoin Treasury space and is that it's so collaborative. Like we know most chairmen, we know most CEOs. We talk to each other. Everyone works for Bitcoin. We all want Bitcoin to succeed, and that opens up some unique opportunities for us that have been in this industry from, we call it day one, because in 2025 was really the year of this industry booming. It creates some unique opportunities which new people don't necessarily have, and we of course want to take advantage of that.
Super cool. Yeah. Okay. I'll take that as a yes. Sort of. Really cool. No, I totally agree. And I think I totally, in the sense that it is a very collaborative space, and that we all kind of win together in a sense. It's something quite unique to the Bitcoin industry, if you will, versus other traditional industries. So if you were to have a message to more generic CEOs, so you kind of made this distinction between Bitcoin treasury companies and companies holding Bitcoin as a reserve asset. And I think that's a fair distinction. There's probably some more nuance there. But if you were to have a message to companies that have traditional operating businesses in whatever industry and are maybe unaware or loosely aware of the role that Bitcoin can hold and benefits it can provide as a reserve asset, what might you communicate to these types of CFOs today?
Good question. I would say you have two ways of looking at this. You have companies like us where the core KPI of the whole organization is increasing Bitcoin per share over time. And that creates a very specific expertise on how to onboard institutional capital and also in many ways retail capital through the public market into this asset class. So our day job is to better understand the demand for these investors on how they want to allocate to Bitcoin in a fully regulated environment. When you look at Bitcoin as a strategic tool, it's actually a very, very interesting topic for companies that has positive cash flow and they want to look into, okay, what's the reason for me to hold part of or the whole a cash reserve or the cash reserve that you don't need for operational expenses for the next 2 years. What's the reason why I should hold that in Bitcoin? The most obvious one is, of course, the fiat hedge. Like it's, I think Jack Mallers called it smuck insurance. Just be ensure that you have some just as an insurance if things goes really, really bad. And I think we are now at this point that people should start thinking about maybe a little bit darker world.
Certainly.
I'm typically an optimist, but here I'm more on the dark side, unfortunately. So protect yourself against the local currency by having some Bitcoin on your balance sheet. But more importantly, I think Bitcoin now opens up as I said, like it's an economic battery, it's money battery, it's sitting there as a potential incentive program. So let's say you are a company that needs highly skilled people where, I don't know, that could be a real estate broker, for example. They only work for themselves. And if someone else basically give them more another place, they will leave. So what I would do if I created this real estate broker chain was to, instead of taking dividends of that company, I would reinvest all my profits into Bitcoin. And I will give all my employees options or warrants. This is a way where all the real estate brokers that basically work deal by deal, and if someone gives them a higher percentage of the deal or better terms or whatever, they will leave. But in this case, you can actually create an incentive mechanism, use Bitcoin as a tool to develop the company and create more stickiness for the best people, and the best performing people will be very loyal to the company. And that creates equity value. because you can't sell a real estate broker, because if you are the wrong owner, everyone leaves and it's worth zero. But if you know that the best real estate brokers are incentivized to be there and backed by a Bitcoin reserve and create a culture that people want that Bitcoin, you have all this mechanism that can turn that company from a non-performing company to a very, very valuable company, because everyone wants to be where the money is. If you do that with a compounding asset and a strategic monetary capital battery, it can accelerate your business model. Yes, that's the two different reasons I would say. Like, look into the Swedish kroner, hedge, like get some insurance, get some Bitcoin, and I think if you read 3 hours about Bitcoin, you will quickly understand why you need it. And second, think about how you can strategically use it as a tool to develop your company. And my third message is that don't think that you need to do this all alone. Bitcoin treasury companies are doing it all the time. And I actually see that as a big part of the future of a Bitcoin treasury company, is to help all the other non-Bitcoin treasury companies, but still on having some exposure to Bitcoin. It's much easier to use someone like us in the beginning as someone that can help. And maybe later on we have some products and services that we can pool capital together and create some value together.
Super cool. That's great. I spoke with Scott Ellum from XCE last month, and this kind of talent retention element that you brought up, it's quite similar to what he's kind of doing over there in terms of incentivizing his employees on the talent search, executive search part of the business. And I think that's a great thing about Bitcoin, right? Kind of number go up technology. Even if these employees are not Bitcoiners yet, they're certainly incentivized by the 30% compounding return, right? They just need a few years of exposure to it to understand the benefits. Really cool. And I like that what your thoughts are as well about kind of the Bitcoin treasury companies that have already gone through this journey and have kind of gone into the deep end, being able to kind of act as guides for the newbies as well. I think that's going to be an interesting dimension that we see unfold in the future as well. Let's go into maybe a little more of a boring topic here, but I'm kind of curious. So since being listed in Sweden as a Bitcoin treasury company, you also have the health business, so you're not kind of a pure play as such. But what has that experience been like in terms of scrutiny from the public regulators, from the stock exchange, any other kind of challenges you've kind of experienced, and how those have been overcome when it comes to kind of communicating what this business model is and why it's a legitimate business from a regulatory standpoint?
So I would say the biggest challenge we have is education, and most people in finance are incentivized to not doing any mistakes, and they are incentivized to being conservative. That's true for insurance, that's true for banking, that's true for brokers. It's very few people that are actually incentivized to earn a lot of money and look at new opportunities. If you work in the compliance team of any bank, you don't care about the 30% IRR or 21 million in 21 years. I mean, it's not something you look into. Our experience with the stock exchanges, the banks, is that some people don't understand, and you actually have to actively spend a lot of time to understand it. But if you look into the history of any other commodity, that was the same with oil. Like, very few banks wanted to finance oil companies because it was volatile and it was like looked at as a cowboy industry. I think even if it has big societally impact, it doesn't necessarily mean that everyone understands it from day one. So the biggest challenge is education, for sure. And we have faced issues with, I think, every part of the financial industry. That includes like banks that don't understand, insurance companies that don't understand. And that makes me very bullish that the future of finance will run on Bitcoin, because the legacy infrastructure is broken. It's actually dead. It sits a lot of people with zero incentive to change, and they are swimming with a dead whale. And it floats now, but eventually the air will go out and the whale will sink to the bottom of the ocean.
Yeah, no, I think that's a pretty interesting metaphor for a lot of aspects of the kind of global financial system, but especially the regulations in Europe, I think, are particularly restrictive for entrepreneurs, and especially those wanting to do something in the Bitcoin space. But I guess the good news would be for companies kind of following your path. Now you've sort of kind of paved the way a little bit, such that regulatory bodies should be a little bit more familiar with what this is all about.
Yeah, I mean, it happens in any other industry. The only, like, I hear this, I was in London now in a few days, and I still hear that, but Bitcoin has zero underlying values. Like, but if you look at any interesting models these days, they are digital. Like, why do you pay more multiples for software companies than real estate companies? Why do you pay more money for influencers than doing marketing on your local bus stop? Like, the atoms of the world has a lower multiple than bits has. So for me, we just don't understand that around money and value yet, but it will change.
Totally agree. Yeah, it's almost a little bit somewhat dystopian, a little bit, that we're becoming more and more digital creatures, right? We're spending less time in the physical world, more time in the digital world. It's a natural transgression, I suppose, but it's also, yeah.
I think it will end very well. I think we have given the internet so much data now, and AI will automate a lot of what we do online, and that will free up a lot of time so we can spend more time in the real world. I think the pendulum is swinging back again.
Yeah, that's always been the kind of claim, right? Technology should, increase productivity, and therefore less time should be spent for the same kind of economic output. But it just hasn't seemed like it's kind of gone that way since the Industrial Revolution. But I tend to believe, and you might agree with this, like, the monetary system the debt-based monetary system has been part of the contributing factor to that kind of inability to really reap the leisure and free time benefits that should come with increased technological productivity.
Yeah, for sure. And I'm 100% agree with you. Money and state should not be something that goes hand in hand. Money needs to be, as any other businesses, needs to be in a free capital way of doing things. It needs to be the free market, and each individual needs to have the same rights to participate. And Bitcoin does exactly that.
Yeah, not often you hear words like that coming from Norwegians, but it's very positive to see that change happen.
I think Norwegians are changing quite rapidly now. I think the whole wealth tax and tax situation, tax the rich, has now gone on for a little bit over 4 years, 5 years. And I think people start to realize that, it's not only the rich people that leave, but they're also taking away jobs. Fuck, jobs impacts me. I want them to have jobs here and not giving all that jobs to Switzerland or Sweden. So I think it's changing, and I think people understand that government also needs to have rules. And it also needs to get consequences if you do things really, really badly. And I look at the government as a company. If the leader doesn't perform, you should take them out. But it's a little bit different incentive mechanism in politics. And most politicians today, compared to 100 years ago, have no real experience. They have only climbed this political ladder, and they have zero clue about what they are doing.
Yeah, we're kind of a long ways away from Plato's philosopher kings as our leaders these days. It's much more the people who just know how to win elections, right? You started off kind of talking about institutional investors, and you mentioned Norges Bank and its exposure to MicroStrategy and Metaplanet, which, as you mentioned, is indexed, so it's kind of indifferent to the model. That's my perspective, at least. It's just the fact that it's a big enough company that it ends up in their portfolio, but still a positive signal. And certainly in the US, we're seeing more pension funds, like CalPERS, and others buying MicroStrategy. So, I mean, I don't know exactly how to phrase this, but like, when do you think that Nordic pension funds or other very large institutional investors will begin getting exposure to not only MicroStrategy, but also, let's say, European Bitcoin treasury companies like H1?
No, I think like a 500 million to a billion market cap starts to be when, with a good liquidity profile, starts to be when institutions are looking into it. We need to 5x from here in terms of balance sheets to reach that. And I think that's very doable in a relatively short amount of time, meaning months or at least not many years. And I think you also need to go to a proper regulated market, like many of these European Bitcoin Treasury companies are on what we call a non-regulated exchange. So they need to go up to the main markets of the world, like you have NASDAQ in Sweden, and you have Euronext in Oslo and Paris, but you need to go to the main list because their compliance needs to check that, okay, they have all these committees and blah, blah, blah to allocate to this company. So I actually think it's a matter of size, because I think the general Bitcoin thesis, especially when it trades where it trades today in and around one times MNAV, makes it very attractive way of allocating capital to get their preferred Bitcoin exposure as an institution. So it's a little bit about size and liquidity.
Okay, cool. And then to what extent do you think these might also be buyers of the credit instruments? If we are successful in issuing credit instruments that pay, maybe it's 10% attractive in the US, maybe in Europe or in Switzerland, as you mentioned, you can get by with 5 or 6 and be quite competitive with similarly risked instruments. So do you think that pension funds could be natural buyers for these types of products as well?
Oh yeah, for sure. I mean, it's the moment Sailor or someone else can get that credit rating to a single A, or which I have talked to a lot of credit people that says, if you remove all the names, he should be a single A. But it's Bitcoin, blah, 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 and therefore he get this basically junk bond status. But it's something. So I actually think that the institutions are going to be bigger buyers of the credit instruments than the equity instruments, because they look at okay, so what's the risk of me losing my money, and second, what's the probability that they pay me back? The moment they start to look into the strategy's capital structure, they say, okay, this is fantastic, this guy is doing something new, but it's very, very solid. Yes, the model sounds a little bit different from what we have seen before, but everything is there. The Bitcoin is there. The cash is there. What's the short-term risk I'm taking here? It's basically, he has de-risked that investment significantly. So I think when people start to see that and this market matures, Sailor did the Bitcoin equity model for 4 years before it took off. Probably this time it takes a year or two before the credit market takes off. But I think we are seeing the beginning of the capital markets being eaten by Bitcoin, and institutions will like it.
Love it. Yeah, and I guess, when you look at kind of matching to the liabilities these pension funds have, I feel like some of these credit instruments could just be the perfect assets for them to have that match their liabilities that they require, right? So I also believe that that's going to be an interesting product for these types of investors to get access to. Okay, so as we wrap up, Sander, thanks again for the time. And I guess one last question. You mentioned obviously the Swiss deal with Future Holdings. That's probably a big priority for you guys this quarter. And then depending on how long it takes to close, potentially later into the year. But what are the other kind of key priorities for H100 as you go through 2026?
I think we've given a few hints during this episode, especially around how you consolidate and create instruments across Europe, and how you can basically use the products and services, the expertise to create products and services related to what we do on a daily basis. So I'm a big community fan. I believe in collaboration, and I would really like to see some collaborative protocols or infrastructure projects being developed in this industry, particularly fit for the European market.
Very exciting.
On top of course, keeping racing for the equity flywheel. We are quite well known for doing this tranche system. Maybe we'll see some equity or convertible bond tranche capital raise plans. And of course, the credit market is something we follow deeply. But I'm very, very passionate about bringing fiat capital into the Bitcoin industry, and how you do that, I think you do with collaboration and these community-driven business models. So we will see 2026 brings us, but it's definitely the year of institutional adoption of Bitcoin. And I think Bitcoin treasury companies will play a critical role in that transition phase.
Couldn't agree with you more. Very exciting year ahead for H100. Really going to be avidly watching from the sidelines and following the company as it goes through 2026, which I agree will be a fantastic and exciting year ahead. So Sander, before we part ways, if folks want to learn more about H100, if they want to learn more about the stock, the equity, where can they find information on the business? and where's the listing and so forth?
Yeah, so H100 is both on LinkedIn and X under H100 Group. And you find more information about me. Just search my name, Sander Andersen. And we are listed on the Nordic growth market under the ticker H100. And we are also having HOGPF in the US. The Frankfurt ticket is so-so, but it's there as well under the ticker. Just give me, I actually forgot it. G.
Great. Awesome. We'll put all that information into the description of this video. And with that, Sander, thanks so much. Wish you a really great weekend ahead. It's Friday today, so hopefully I have some time to get out and get some exercise in the beautiful Swiss Alps.
Thank you so much for having me, Ted. It's been a pleasure.
All the best.